Hi, I'm David Schenk. I'm an attorney and an enrolled agent, enrolled to practice before the IRS, and I talk about tax issues, estate planning, and asset protection. Today we're going to talk about whether the IRS can take your car. Technically, the answer is yes. But the realistic answer is yes, but they probably won't. The IRS isn't like most creditors. Most creditors, like a bank or a credit card company, if they want to take something of yours to satisfy a debt, they have to go to court and get a court order. And generally, the IRS doesn't. If the IRS wants to garnish your wages or seize your bank accounts, they can just send a letter to your employer or your bank, and it's done. And the same applies to your car. If they want it, they can take it. But they probably don't want it. For one thing, the IRS is only going to get whatever equity is in your car. That is, they're only going to receive the amount that the value of your car exceeds the amount of any loan that you have on your car. And for the vast majority of taxpayers, the equity in their car is zero or even negative. Let's look at an example. Let's imagine that you have a 2020 Ford Mustang. And it has a private sale, which is a sale between two people, not between a person and a dealer. It has a private sale value of $17,000. And let's further imagine that you have a car loan for $15,000. Well, quick math shows us there's $2,000 of equity in the car. But even though you have equity in your car, the IRS probably still won't want to take it. Because first they have to find it, and cars are mobile, and then they have to physically seize it, and then they have to warehouse it, and then they eventually have to sell it. And because auction sales are somewhat unpredictable and are often at lower prices than private party sales, they probably won't get $17,000 for it. The IRS much prefers to levy liquid assets. When they seize your bank account or you garnish your wages, they just get money, which is much, much easier for them. That isn't to say that they won't take your car. They absolutely can and do take cars. But it's generally reserved for the worst offenders, taxpayers who are trying to hide assets, people who repeatedly take frivolous positions on their tax returns, have ongoing payroll tax issues, or have committed tax fraud. Of course, if you receive a notice of intent to levy, since they probably won't take your car, they probably will take something. But just most likely something liquid. So of course, under no circumstances should you ignore a notice of intent to levy. Or if you get its big brother, the final notice of intent to levy. Of course, it might be different if your car is extremely valuable, or a collector's item, or something like that. The goal of the IRS is to get their money, and if they determine that seizing your car is the best way for them to do that, that's what they're going to do. If the IRS is levying your assets or garnishing your wages, whether it's your bank accounts, retirement accounts, your house, your car, your Social Security check, your paycheck, or any other asset, there are steps that you can take. And note that I have individual videos on each of these programs. So one thing that you can do is you can simply pay off the debt. If you have the money or can get the money, paying the debt in full obviously will stop all levies and garnishments, and the IRS will also lift any liens that they have filed against your property. Another option is to file a collections due process appeal if you're within the appeals window. This is an IRS internal appeals process. It's only going to be available to you relatively early in the process. But they're going to pause any collections activities while your appeal works its way through the IRS process. You can also set up an installment agreement. Once you've established an installment agreement, all collections activities are going to cease. However, any liens that the IRS has filed are going to remain in place until the installment agreement is paid in full, or until you get the lien released some other way. You can ask for currently not collectible status. If you can demonstrate to the IRS that you can't pay your basic living expenses while at the same time making payments on your tax debt, you can be put into currently not collectible status. But be aware that the IRS's ideas of how much you need for your basic living expenses is quite low. For example, the IRS says that if you are a single taxpayer without dependents, you can live on about $1,200 a month. I don't know a lot of people who can live on $1,200 a month. You can also file an offer in compromise. An offer in compromise is a formal offer to the IRS to settle your tax debt for less than the full amount. And while they are considering your offer in compromise application, they're going to stop all collections activities, and the process can take from a few months up to as much as 2 years. Additionally, you can file for bankruptcy. When you file for bankruptcy, an automatic stay stops all creditors from any collections activities, and this includes the IRS. If you have a substantial amount of non-tax debt, this can be a really good option. But not all taxes are dischargeable, and it can be tricky to figure out which ones can be discharged. I have a video on this issue as well. If most or all of your debt is taxes, an offer in compromise is often a better choice. Or you can file for innocent spouse relief if your situation qualifies. If you are or might be an innocent spouse, the IRS is going to cease collections activities while they consider your application. And finally, check to see if you are approaching the 10-year statute of limitations, which is the limit in which a tax is collectible. You might just be able to wait them out. However, it can be a little tricky to determine exactly when the 10-year statute of limitations is up, because there are many situations that are going to toll or suspend the running of the 10-year limit. Disclaimer: this video and any accompanying text is for informational purposes only. The information provided does not and is not intended to constitute legal advice. No attorney-client or similar relationship is formed. If you require legal advice, please contact an attorney or other legal professional. This video covers a complex legal area in just a few minutes, and of necessity leaves out much of the detail. Don't make decisions based only on this video.